Hey guys, this is Aditya, investor, trader, and mentor in stock markets. So today we have a really interesting topic and it is about how many stocks you should have in your portfolio. So let's start off. So going into the crux of the video, I want everyone to have at least some knowledge on how to pick stocks, right? Because that is very important. Then only we can see how many stocks do we want in our portfolio, right? So the first step of how to pick stocks, Harsh has recently made a video on it. So the link for that is in the description below and you'll find it somewhere here. So just click it and just have a look if you're a complete beginner and you have no knowledge on how to pick stocks. Now I'm assuming that you have some amount of knowledge at least. And now let's start off and see how many stocks should be there in your portfolio. So there are three considerations which we will be taking into account. The first one is of course number of stocks. So we will have different number of stocks depending on the size of the portfolio. I'll be telling you everything. So the reason for us having different number of stocks is so that our portfolio is a little diverse. I mean, for example, if we've put everything in one company, let's say we had put in everything in Yes Bank, which was performing perfectly well and everything was perfectly fine until there was some management issue. And that thing came into the news and the stock just started hammering like anything, right? So we don't want this kind of a thing in our portfolio. If it does, so Yes Bank or maybe any other company should be a part of our portfolio so that our portfolio doesn't get destroyed just by one share. So we have to pick different shares. So the first one is number of stocks. How many number of stocks per portfolio? The second one is number of different sectors of those stocks. So for example, again, if you concentrate all your holding in one sector, let's assume you're concentrating everything in banking sector, and RBI comes out tomorrow and says that from now on, these are the stringent things that each and every loan applicant should complete. So if this happens, or if any other news which actually hinders a banking sector's performance, then if you have, let's say you have the best shares like HDFC, ICICI Bank, Kotak Mahindra, all these shares, maybe Central Bank of India, maybe SBI, maybe Punjab National Bank, any share, the full industry will be affected quite a lot. So what we want is in our portfolio, we should have shares from different industry and different sectors so that again, they are a little diversified and we don't fall into a major trap if some major problem happens in future, right? The third one is the size of the companies. So generally in India, we have three different segments of when we say size of the companies. And by the way, size of companies is determined by the market capitalization of the company. So when we say a company which has a market capitalization of more than 20,000 crores, we call it a large cap. If it's between 5,000 and 20,000, we call it mid cap. And if it's below 5,000, we call it a small cap company, right? So we have to figure out what size of the companies should be there in our portfolio. Why? Because the risk and reward is majorly defined by this. If I go into a very small cap company, I have high risk, but I have high reward. In a large cap, I have low risk, but low reward. So we have to make a perfect thing to match everything. And these three are three criteria we'll be going through. Now, every portfolio will be little different. And mainly I have done one thing to just make it a little more personalized. I have made few buckets depending on the amount of investment you are going to put up. So let's say if you've invested this much amount, so use this much bucket, which I'll be just telling you, and just invest accordingly. So the first bucket is rupees 50,000 and below. If you are investing or if you have the total capital of 50,000 and below, what you have to do is you have to have 3 stocks in your portfolio. You have to have 3 different industries or sectors in your portfolio, and you have to have 2 large cap, 1 mid cap. The reason for all this is that when you're investing, right, never ever invest in just one company. That is the biggest blunder you can ever do. At least have 3 companies there. And when you have just 3 companies there, you have to have 3 different sectors. So when I say sectors, it can be anything like banking, that's insurance, there's automobile, there's pharma, there's infrastructure, there is FMCG, there's luxury goods. I mean, you can go on and on, right? There is no limit to that. But generally, these 3 companies should be from different sectors if your portfolio is below 50,000 rupees, right? Now the next bucket comes from 50,000 to 1 lakh rupees. Now, if you're in this bucket, so number of stocks you have to have is 6 stocks, and the number of different sectors you have to have in those particular stocks is 4, and you can have a total of 4 large caps and 2 mid caps again. So this way you will be again completely diversified. You will be focusing on the good shares. You will be into different companies, and also mid cap shares will be there, which will increase the profit capability in longer term. Now, the third bracket we have is from 1 lakh to 5 lakh rupees. Now, here what we have is the number of stocks is 9. The different industries or different industries you have to diversify is in 5, and you have to go for 5 large cap, 3 mid cap, and 1 small cap. Now, here we have introduced small cap, and I'll tell you why we have introduced small cap in this bucket itself. Why? Because when your portfolio is small, right, you have to slowly go into a higher bucket portfolio. That is our number one target. Why? Because if you have a small portfolio, you won't be able to make a lot of money through investing, right? So our first thing is to slowly, gradually get our portfolio up to a certain level. And if we take a very high risk on a very small portfolio, then that can be a complete very big problem. Why? Because if we lose that particular money, or maybe lose the starting capital we have or a small capital we have, then we might not have a lot of money to go up there, right? So shuru par, take lower risk, and slowly take a little higher risk as you have a little more money to play with. So the last one is if you have an amount of more than 5 lakhs. If you're investing an amount of more than 5 lakhs in picking stocks only, so what we have is you have to pick 11 companies. The number of sectors you have to have at least 6, and the number of companies is you have to have 6 large cap, you have to have 3 mid cap, and 2 small cap. So this was a thing in the large one. And again, what you have to do is you cannot have all small cap shares. Clearly, that is one question which I have quite a lot, which I have received quite a lot, that if we have this much money, let's do one thing, let's put everything in small cap shares. They should do really well and we should make a lot of money, right? But unfortunately, that doesn't happen. You have to balance your portfolio properly. Then only you can be a long-term player. If you do a very short-term game, or maybe if you invest in small companies, take a lot of risk, you might be good for 1 year, 2 years, 3 years, but one problem comes in. Like recently, we've had a COVID crash. So one problem comes in and you're wiped off. So we never ever want that. First thing is that we should stay in the game. Slowly, as the compounding figure comes in, as everything goes in, as in when the companies become better, they become bigger, you get more dividends, and slowly, you'll realize that you're actually making quite a lot of money, right? So which is our main aim. So again, I'll just summarize everything. So we have 4 buckets, that is below 50,000. Then we have 50,000 to 1 lakh, then 1 lakh to 5 lakhs, and 5 lakh plus. And we have those certain amount of shares and sectors and the size of the companies we have. And through that, I am pretty sure if you stick to this, you will be good to go. Now, one more thing. I will never ever recommend you to go over 11 shares. And the reason for that is, if you see any person's portfolio, any big investor's portfolio, be it Mr. Warren Buffett, be it Mr. Rakesh Jindal, all of them, what they have is, if you go through their portfolio, then you'll find few portfolios online itself, their general holding and all. So you will see that about 80% of the portfolio, let's say 80 to 90% of the portfolio is concentrated on only 10 shares. About 10 to 11 shares. So this is our aim. If you go with maybe 50 or 100 shares, if you have, I would say go for that only and only if you have no knowledge in stock markets. If you have knowledge in stock markets, or you want to make a career here, or you can spend some time here, I would definitely recommend to have not more than 11 stocks. So that was it for today, and now I'm pretty sure you must be very clear exactly how many shares you should have in your portfolio. And if you liked our content, do one thing, subscribe to our email community. We have amazing emails coming over to you, and different learnings, different stories we want to share. And you should know, as a trader, as an investor in stock markets, you will get all those information in your email. So if you're interested, go into the description below, subscribe to our email community. So like the video if you liked it, dislike if you disliked it, and in the comment section below, let us know exactly what all topics do you want to see in the near future, because we take a lot of data from you guys and we try to create the same content which everyone wants, right? So do that, and I will see you in the next one.